Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, and Dan Deming, Managing Partner at KKM Financial. We're here to discuss the market's ability to fight off overnight weakness is another factor in keeping implied volatility levels in check. It's great to see that both of you, as always. Welcome back to Trade Talks. Dan, how do you interpret that? Would you say things are reverting back to normal?
I'd say they are in the sense that when you look at the VIX futures curve, we are reverting back to normal. We did see it go to backwardation the week before the end of May, but now as we move into June, we're seeing a contango in the first 3 months. It flattens out during the summer months into September, but nonetheless, from a futures curve standpoint, it does appear we're coming back into a more normalized curve. However, at elevated levels. And again, I think, you're seeing a cushion between realized volatility and implied levels of volatility, both short dated and longer dated. And the futures are holding a significant premium to cash. So there's still a great deal of uncertainty. You're just seeing the curve shifting higher, but still remaining in what would be considered somewhat of a normalized pattern.
Right. Of course, Dan, the question is, do we sell in May and go away? But it seems as if the summers no longer follow that pattern, particularly as it just seems to be more busy this year, especially with the amount of uncertainty that's been inserted into the situation.
Sure. Yeah. And I think that has been a misnomer really for the last several years. And it appears that this market's poised for, the potential to, again, see potentially a challenge of the highs if we see some of the trends continue into the summer. And primarily one would be inflation continuing to move lower and also the tariff situation and creating a great deal of uncertainty. But if it gets sorted out, the market seems to be very resilient. I mean, we're seeing buying on any kind of weakness. And once again, we saw that unfold this morning.
Yeah. And Russell, you've been following the Nasdaq 100, the NDX short side of this.
Yeah, no, and I've been, we all love to talk about VIX, and we love to talk about VIX as, a fear index or an indicator of how much we expect the market to move. Well, we've all become very, very short-term focused with daily options, and I've been keeping up with the one-day straddle as a percent of the underlying. It is almost a VIX-like indicator for the Nasdaq. I think it's better than VXN for the Nasdaq actually, and it has been nothing short of elevated over the last couple of months. Going back to 2022, the average index at one day at the money straddle pricing as a percent of the index is about 1.09%, 1.05%, depending on the time frame. It has been just a tad under 1.5%. It's been 1.49% the last 2 months, and it's been consistently elevated. April, it being consistently elevated didn't help at all. Option traders got run over an awful lot. It's remained elevated through May, but the moves are starting to come down, and we actually saw a slight profit for option sellers in May. First time seen a decent profit for short-dated index option sellers, I want to say in well over a year. We've had profitable months, but they've been less than 100-point profitable months. It was about 750 points last month on being short, but that's coming off a 1,400-point loss being short back in April.
Right.
Do you think, it's actually a question for the both of you. Russell, I'm going to start with you. Do you think it's a function of the product with the amount that we have out there now as it relates to very, very short-term products? Do you think that is contributing to the volume and the types of moves that we're seeing? Is it changing the composure of the options complex?
What has happened with respect to the options complex and specifically both SPX and NDX, and not so much RUT, is you've seen people take a look at the pretty persistent overpricing of short dated options, and I think enough market participants have come in, including funds that are consistently shorting at the money index options or even intraday index options. And I think it has suppressed the volatility relative to the subsequent moves. I mean, there's I think a 14 basis point difference over the last 2 months between the average daily move up or down in the NDX and what the NDX straddle is pricing in. And the NDX straddle is pricing in over 40 basis points higher than the average. So even with much larger moves, we're seeing a higher pricing with the at the money straddle, but not high enough. And I do think that that's a function of market participants trying to harvest that short-dated
Yeah.
volatility risk premium
Yeah.
by selling index options.
Yeah, Dan, I'd like to get your thoughts on that as well.
Yeah, I agree, Russell. I think it's an interesting dynamic as we continue to see the time frame condensed as far as the zero day options now and the activity that's increased and it's impacting price movement intraday. And I think that's really the key here. You're looking at the intraday swings in the market that have been substantial. If you look at it day over day, maybe not as pronounced, but when you look at the intraday moves, and particularly most recently, the dip buying that's unfolding, that's suppressing volatility in a sense that it typically, when the market bounces back, you see vol come in, but not necessarily being realized because the moves are so substantial on the intraday basis. So I think there's some mispricing there. There's no question about it. And as the markets continue to realize this intraday volatility, that you'll see adjustments there on the price on a pricing standpoint. But overall, when you look at the premiums that are built into not only the VIX versus the realized volatility on a day-over-day basis in the VIX, you're seeing that higher. You look at the after-money spread on the SPX 30 days out, implied vol around 16. Yet the VIX is priced around just shy of 20. So there's a significant cushion there between implied and realized volatility. And then you put the VIX futures in there with another $1.50 to $2 in premium. So the market has adjusted for the idea that you're seeing this substantial intraday volatility, keeping things elevated. Couple that with the uncertainties from the press standpoint or a news standpoint on an intraday basis, and higher yields, and all those factors I think are contributing to why we're seeing the pricing structure in the VIX and the VIX futures elevated. But again, as I pointed out, normalizing at these elevated levels.
Yeah, and it's a great point that you make. And Russell, I mean, if you had your head under a rock up from year to date until today, market's relatively flat-ish on the year. But look at the moves that we've had, to Dan's point. I mean, just round tripping intra-session. It really is quite remarkable.
If you'd come back from a deep sleep, you would, and you saw
Right.
where the S&P is relative to, let's even say Inauguration Day or something like that. You'd be absolutely shocked at some of the VIX activity. You'd be probably pretty surprised by the derivatives volume that we've been seeing, because all this volatility has definitely driven the volume across the board across lots of products.
Yeah, well, I mean, which is great for the space overall. Now that we are in the last month, going into the back half of the year, I can't believe we're talking that it's June already.
I know.
And I mean, what are your thoughts? Do you continue? Do you expect to see these types of patterns continue?
Russell, you got it?
Oh,
Yeah, I'm on. Oh, I thought that was a Dan, but I'll.
I didn't know.
Just,
We'll both jump on it. But go ahead, Russell, if you.
I was just going to say, I do think that the intraday volatility seems to be coming down a bit. I don't know if we're getting conditioned to the tweets and we're realizing that if you react to one tweet, then the next one's gonna hurt you. So the intraday volatility has come down since April throughout May. It's likely going to come down as the summer goes along, just based on seasonality.
Yeah.
And just one thing, I just to loop back to when you were talking about the sell in May thing, the only market that really works in is the small caps. But I just hate picking on the small caps because they've underperformed forever.
True. Yeah. I mean, I'll tail that with I think, but if you look at the VIX futures through the summer, you're pretty much a flat futures curve. So the uncertainty going into the summer is elevated, but there's still, it's spread across really when you look at July, September, October into August, that the futures curve is pretty flat. So that tells me that there's, the uncertainty is elevated, but there's no outsized risk at this point based on the expectation that vol is going to see a significant spike headed into the fall. The other outlier is the idea that rates are going to potentially come down in September. I mean, the market's still pricing that in. We got some pretty decent inflation data last week. So I think that's going to have an impact as far as expectations, as far as volatility events moving forward. So I think that's another factor that's being priced in now as we move to the fall. So those are the things I think that, again, some of the headwinds for the market, but also it's being spread across several months because of, again, the potential for when these events might unfold. Now, if we don't see a rate cut in September, that certainly could see an increase in volatility, as well as, again, the debt structure is the other thing that's keeping things elevated, I think, and that's going to persist throughout the rest of the year, even if we don't see significant increase in realized volatility.
All right. Appreciate both of your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.